on my way down to Southern California tomorrow, and I might stop at Tesla's diner where the waiters are robots. But here's the real story behind a lot of the robots in the world and smart speakers, wearables, even earbuds. There's a tiny company that you've probably never heard of. It's CEVA, and they don't just build the gadgets, they license them and the brains inside them. And there's 20 billion devices already powered by this company. If you want to see me trade these opportunities just like this in real time, that's what StockMate is built for. So you get daily live trading. If you don't want to be guessing on stocks and paying for endless subscriptions that don't deliver, you can grab your StockMate lifetime access right now by clicking the second link in the description and grab your free t-shirt while it's still a bonus. So CEVA isn't some flashy AI startup. It's a stable, well-established infrastructure play that may benefit heavily as AI demand surges. And that's exactly what we're breaking down today. So you can see the company's been IPO'd for many years, since 2006, so 2006, and they continued to build their market cap slowly but surely. And they've had some spikes up to high levels, like in 2021, up to $83 a share. And they're down here now around $22 a share after recently selling off. Now, when we look at their company, you can see some of their partners that they have licensed to. So they have embedded technology for 5G. They work with, again, could be the different sensors on your smartwatches, or maybe even, one of the smart home things that make sure that you can talk to it like Alexa or something like that. And they have partners all over the place. You got Broadcom, which is one of the main providers. They're a Fortune 500 company. I think maybe top 10 company in the world. Powers Apple, Ceragon. They're with Intel, as well as licensing out to some other main companies like Samsung. There's On Semiconductor and many, many more, including Yamaha and others. So why are we following them? Well, I've noticed some of their solutions and their products are really cool. And they have this really awesome promo video on their page that is basically breaking down the life of somebody that is, let's say, talking with Alexa, and then they're looking at their smartwatch and they're monitoring their heartbeat, and then maybe they're using a smart mirror, and then they go into you go into this Tesla here, and you get driven autonomously to where you're going. And this is in California. I actually know exactly where this is. This is right on the way to San Fran, I think. And then you maybe have Zoom calls, and then you're using AI locally on your machine while you're at the beach, and then you have glasses that are looking at things, and then you have a robot that serves you up. And it's actually funny because I'm going to a diner most likely later, or tomorrow, or later this weekend, where Tesla is serving food. And then you have your smart meter, and you have all these things. And CEVA says 20 billion CEVA powered devices have been shipped by their customers. And so essentially why that's kind of cool is you can see Nokia, you got LG, a lot of their customers that they're partnered with. There is very clear testimonials for 5G, for internet connectivity, for robotics, for all types of things. On Semiconductor, which is one of the US manufacturing semiconductor companies out of Arizona that's been getting some traction, is saying that they love their solutions. And so these are really interesting plays because we look at their financials. So three things we look at. The first thing is the market. The market is growing in AI and in smart tech, which is where they are. And in their market, the companies they're working with, they got real world usage. And we see that real world usage demonstrated by their partnerships and their licensing. Then outside of the real world usage, so we just went through the market. Profits in this market are huge. Big tech companies are using this technology. Second, real world usage. We know that they're actually signing deals and that they are licensing their software or their IP solutions, their silicon and software IP solutions. And then, okay, we get through the market. Now we're looking at the financials. This is the analysis stage. We'll go through financials, we'll go through the chart, as well as some of the news. But take a look here, on the financial side of things, it's interesting. They're a $528 million company, and you can see that they got around 404 employees, and their quarterly revenue has been very consistently in that $25 million range. Now, kind of consolidated a little bit, and some people would look at 2023 and say, oh my gosh, their revenue is declining. But they got it back up to in 2024 where it was above 2020. And then quarterly, in June, 25 million there, and then 25 million in March. They're on track to do another 100 million this year, which is pretty on track and consistent. Now, when you look at their balance sheet, same deal. Their balance sheet, so the blue lines right here, the blue is the total assets. So you can see their total assets are growing, and it's important to look for companies that their assets are larger than their liabilities, which in this case they are. They're very disciplined. Their liabilities at 36 million the last quarter, with 300 million in cash, or total assets, about 157 million in cash. And so they're kind of stable. They're a stable play, and their valuation's at 528 million, bringing in about $100 million a year. They're kind of a stable play, but I think that they have a foundation that might be really good for the AI growth that we're seeing right now, and potentially their technology could serve as more of a beacon for some AI companies to get that technology, and maybe the amount that they see per deal starts to increase. So they are slowly kind of building this market cap here over the last few years. You kind of see this slow, steady build. Again, very slow, very steady, stable. But what we're looking at here now, we're getting to the analysis stage of the chart right now. The chart indicates that they are seeing this gradual increase. They recently were selling down after a big kind of push up to $85. They've been selling down, and then they started to, so this was the downtrend. Then they started to consolidate. So, a reversal, oftentimes you see 3 stages to a reversal. You're going to see the support and resistance on the downtrend or the uptrend. And then you're going to see a consolidation, meaning a movement from left to right, which we kind of see that here with this recent trend. So you see that kind of movement from left to right. And then potentially you get a breakout or what could be a retest. So then maybe we see a trend similar to what we saw back here, which could be something like this, trend upward. Now it's more of a steady mover. It doesn't happen very quickly. But when you look at the movement that we're seeing, we're kind of now indicating that this is more of a slow moving play that might be a steady place to park some money, and potentially could have this recovery back to where they were in February 2025, something like this, be about a 60% increase to those levels, or a 70% increase to those levels. So the reason I like it is because we've seen it kind of sell back down to a support. Overall, they're very stable in their revenues and their assets, and their market cap is still at 500 million. And realistically, if they continue to grow the way that they have for the past few years, and maybe AI is more of a catalyst for them than it is something that would be destructive, and we see their assets hold steady as they have, and revenues increase, then potentially we could see this company really start to grow. So that's kind of the new side of things, is that we're looking AI market potentially as a stimulus for them, and that would be about a 70% increase. Now, of course, the previous highs we're looking at, 250%, something like that, at 2x, which would be excellent, but not really betting on that. Just kind of watching the levels, seeing if maybe we can get a move like this, and potentially we'll be entering some positions there on the near term. Now, the risk there, it does exist. You could see potential sell downs here into this range somewhere, down maybe 10%, 15% into that $18 range if it wants to retest. But we did see somewhat of a triple bottom. You see a bounce here, and bounce here. And you do see a little bit more of a strong support at around $16 where it just bounced. And maybe that's kind of indication that we could see more of a breakout here. So watching it where it currently is, I think the risk is not too bad. And that's why I have it on our list now for AI and tech companies. So we're going to be watching to see if any opportunities present themselves definitely into this week and next week. Today we're kind of just stabilizing with some SOXS, which is the semiconductor inverse that went up today as we're trading it, as we're kind of in some longer term positions with some semiconductor companies already. It made sense for us to trade the SOXS here. And we do trade every morning at market open. Again, if you're trying to consistently build and surround yourself with other investors. And for a limited time, you can get lifetime access to Stockmates before we close it on September 1st. Now, if you don't want to pay a subscription, then I would encourage you, go check the second link below. You can get access at market open and join us as soon as tomorrow. If I earned your thumbs up, hit the like button. Do consider subscribing, and I'll see you in the next video. Take care.